Hey everyone, my name is Zach Bassett with COS Accounting and Tax, doing my compounding interest videos. I hope that you guys like them. Hopefully they can help you through your career, make the right decisions, whether or not to be on a W-2 or a 1099. I'm going to tell you why, to me, it's a lot better to be on a 1099. It's 100% better in my opinion. I would not choose a W-2 if I had the choice ever. Now, some people do love being on a W-2 because they feel like they get benefits. So that's been a big thing. People say, well, what about benefits? I want benefits. Well, if you're on a 1099, you can set up your own benefits. You can create a company plan so you can have benefits as well over here. And the thing about it is, it's even better because you're now going to be able to deduct it off of your taxable income. So if you make $100,000 and you spend $15,000 on your company benefits, you're only getting taxed now on $85,000. So over here, you make $100,000, you're getting taxed on $100,000. Now, on a W-2, people think it is a lot better because of the tax rate that you're going to pay, the amount of payroll taxes that you pay. So over here, you're going to pay 7.5%. Well, 7.65% to be exact, in payroll taxes. Over here, normally it's 15.3%. So people say that a lot, well, look, you're paying double the taxes for payroll. It's a lot worse. But really it's not, as long as you know what you're doing. If you don't know what you're doing and you don't set up correctly, then you're right, W-2 is going to be better. If you know what you're doing, even if you make $10,000, $15,000, something small, you're still going to benefit a lot more by being on a 1099, because what we can do is set up an LLC. We can have it taxed as an S Corp. Make sure to watch, if you want to know more about those, watch the other videos that I'll be posting. They're going to explain in depth what an LLC is, what an S Corp is, why it's good to be those. But for now, I'll just tell you what it does. It's going to lower this tax percentage down to about 3%. So now you're more than twice as good as the W-2 for SE tax, self-employment taxes. Payroll taxes is another way to put it. So already you're looking better over here just on taxes. But let's say you make $100,000 over here, you make $100,000 over here. So I'll just put that in so we can do a little math and show you the benefit. You're going to have both federal, state, and self-employment taxes for these, unless you're in, Washington, Tennessee, Florida, Wyoming, any of those states where there are no state income taxes. So, but let's say you make $100,000, $100,000. Over here, you drive 20,000 miles. So let's say you drive 20,000 miles, you get 58 cents per gallon. So you're going to have what? $11,600 expense. So that's important because I'm going to be able to take it off of my income. Over here, you drive those miles, you don't get anything. Some companies will have where they reimburse you a little gas money, but it's not the norm. And then let's say you also have some, you've got uniform expenses. You got to pay rent on a building, a space. So you've got $15,000 for that space. You've got, there's so many other things you can take. You can take flights, you can take hotel stays, travel expenses. You can take a lot of different stuff you can take for expenses over here, whereas over here you can't take those expenses at all. So now, let's say we keep taking expenses and we end up with $50,000 total in expenses. Well, now we've got $50,000 in taxable income. Well, $50,000 in profit. So you're going to pay self-employment taxes over here of about 3%. So you've got $1,500 that you're going to pay in self-employment tax. Over here, the same taxes, you're going to pay $7,650. So you can already tell, huge difference. That's just one of the taxes. Now you go to federal taxes. Let's say you're at a 10% rate over here. You're going to pay $5,000 in federal taxes. State's going to be about half that. So you're going to be at $2,500. Over here, you might be closer to 20% federal tax. So you've got $20,000 in federal taxes. State's half that. Well, no, state would be a fourth of that, so you'd have $5,000. So you're looking at over $30,000 in taxes on a W-2. What do we got over here? 7, 8, 9,000? 9,000 in taxes over here. Think of the difference there, you guys. The difference between what you can do with only having to pay $9,000 in taxes compared to paying $32,000 in taxes. I mean, you're talking about a, what, $23,000 difference. $23,000, if you compound that over time, you are going to set yourself so far apart. And I'll give you a little example. One of my videos is going to be on the rule of 72. It's something that's really cool. I think that you should all take this down and use it whenever you're thinking about how much you save. I'm going to do the math on it here and step you guys through it real quick. But if you've got $23,000, and let's say, with Fortress Financial, one of my companies, we've averaged 15% a year over the last 5 years, but that's really high. Let's say that you average 11% a year. So if we go at 11% a year, and most of you guys that are watching this are pretty young, if you've got, let's say you're 25, you've got 40 years left until you have to retire. So first thing that we're going to do, so you got 40 years. So we're going to take we're going to go 72 divided by 11, because that's the percent that you're trying to get. So then you get 6.545454. Then we're going to take how many years you have? 40. So we're going to go clear that. We go 40 divided by 6.545454. That means your money's going to double 6.1111 times. That doesn't mean that you go 23,000 times 6.11. You're going to go 23,000 times 2 times 2 times 2 times 2 times 2 times 2 times 1.111111. And you're going to get 1,635,000. That's from 1 year's worth of savings. So 1.635 at retirement. You're already pretty much set for retirement if you make one good decision. You do the 1099, and then you take the savings and you put it in a solo 401k, which you can do over here. Solo 401ks are also better than employee 401ks when you're an employee at a company. Why is that? Because when they've got it set up through whatever company, maybe it's Northwestern Mutual, something like that. There are going to be a bunch of fees for handling all the accounts of every employee at that company. Well, you're the only employee at this company to start. You're going to be able to set it up and have it be just like if you set up an IRA with super low commission rates. With Fortress Financial, you can do 1.5% commission, and there are no kickbacks. So you're not going to have to pay kickbacks like you would at a company like Northwestern Mutual if they set you up with mutual funds, because we do ETFs only. Make sure to watch the videos if you don't know what those are. We're going to explain exactly what those things are and get your business acumen up as much as we can. So yeah, I think that's pretty good. We could keep going and going on this as to why it's best to be on a 1099, but it's so far apart that there's really no reason to go into every last aspect of it. I want to use your time to to come up with, to show you things that are a little bit more important. But you can tell 1.6 million is pretty important. Imagine if you did that every single year over the next 40 years. You know, you might have 50 million bucks ready for you when you retire. That's it. Thanks.